2 points are mutually exclusive. I'm not convinced that it's because of the war that it was falling or going up, right? I think Bitcoin is still a macro liquidity suck. And I think you're going to see this year significant improvements in the liquidity situation. We've got $1 trillion in debt financing, debt servicing. We've got to finance. We've got 10 trillion in debt that we have to basically refinance. We were trying to do it last year at lower rates. They're going to do what they have to do, in my opinion, to get those rates as low as they possibly can. All of that equates to incremental significant money printing this year. I wouldn't be surprised if we see stimulus checks this summer going into the midterms, right? So again, to me, it just all equates to more money printing. I don't think Bitcoin is front running that yet. I don't think the market believes everything I'm saying yet. I'm probably have a little bit of a contrarian on that view. DXY is actually up the last 90 days, which is usually a leading indicator on liquidity. And I think that's why, Bitcoin fell in Q4, Q1 is the liquidity didn't come. And so I think Bitcoin has kind of stabilized in that, and I think it'll stabilize for a while in that kind of 65 to 90K range, which for the non-integrated people sounds like that's not a range. That's insane, right? But for our world, that's a range, right? And I think that's what we're going to see. We may see a wick to 55, but I wouldn't be surprised if the bottom is in. I think that rotation is kind of reached an equilibrium state right now. I think what's really happening is that retail money is nowhere to be found, and retail sentiment in general for the overall investing environment outside of prediction markets and short-term bets is very, very low.